is a really important part, that what kind of access are you granting, for what length are you granting, and
Mhm.
can you revoke that access. These are all authorization and consent management aspect that a consumer controls. So it is on the merchant when they are orchestrating this kind of payment to them to control what kind of questions and screen and consent management you have.
Today, my guest is Anubhav Pradhan, the co-founder and the chief product officer of ShiftMate. In this episode, we discussed open banking and pay by bank. What's the difference between these two? What's actually happening when the customer clicks on authorization with their bank? What does it mean for financial institution, your bank, to enable open banking and pay by bank? I really learned a lot in this episode, and I hope you will enjoy it as I did. And with this, please welcome Anubhav. Anubhav, thank you so much for joining Payments FM.
Thank you. Thank you so much for having me here. Truly appreciate it and looking forward to our conversation.
Absolutely. I think one of the most interesting questions from the banking perspective and from the open banking, actually about the term itself, right? What does the open banking means? And there is a similar term, pay by bank. I think there are some solutions that are popular on the market, right, like Plaid and others. But what is actually open banking means, I think many people think about it like differently in like their own way. What do you think like the term means? And again, like maybe from the merchant perspective, from the business perspective, and how they can use this technology?
Yeah. So think of open banking, very simply put, it's a permission layer. So let's take an example. As a consumer, if you're trying to log in into your favorite budgeting app and you're trying to aggregate your relationship with multiple financial institution into one place. So you want your checking account from Bank of America, your savings account, your deposits or CDs that you have in Wells Fargo, and your investment account all in one place. The way that's basically you're seeing open banking at its play. So what it means that as a consumer, you are able to aggregate all your information to your preferred financial institution or third-party app, and you are doing so in a manner where you are giving consent to the information, access to the information, and you technically own the access to the information, basically. So that's open banking, very simply put. On the other hand, pay by bank, if you will, pay by bank is a payment method. So pay by bank is a payment methodology which is supported by open banking. So what it basically means is you can pay directly from your bank account without using your cards, basically. Generally, there are the couple of flavors to pay by bank. They are historically, they have mostly largely been ACH based payments, which are batch based payments. There is with Fed now and real time payment processing channels, there is higher adoption there. So we are seeing a trend moving more towards the RTP real time payment side. But simply put, it's a payment method which sits on top of open banking.
It's very interesting. If you think about pay by bank, such a used term in the industry, right? Like, hey, you can use card, you can use pay by bank. Based on what you're describing, it's kind of like a hybrid technology that from one part you have like open banking layer that allows you to kind of like have an access to the information. And from another hand, it's still like the payment rails from like, as you mentioned, like ACH or others. It feels like kind of like a hybrid hybrid way or like combination of factors, which is
Yes.
kind of like a little bit, feels like a little bit weird. I don't know. How do you feel about it? Does it feel like a pay by bank where industry right now? Is it like a good solution that merchant can consider, or it feels like it's a little bit like monstrosity from two different technologies merged together to deliver like as a payment method?
It's a great question. When we see the evolution, and I would like to expand it where you're not thinking of these as a payment events. These, if you flip the script and think of it as a relationship event, that's where the incentive is changes, and that's where if you're trying to, as a financial institution, if I would say, if you're making it easier for a consumer to switch easily, and if you're making it easier for the consumer to make payments easily, what you're gaining in the bigger end is the trust. So it boils down, I would not say it's a open banking and then pay by bank. It's about, in this, especially with the AI age, how the shopping behavior is evolving, it's more about the trust and visibility, and how can, as a financial institution, you orchestrate that to the customer, where they know that, okay, how is money moving, and do they trust that channel. So effectively it boils down to, in a adoption perspective, like for example, I would say, here are some numbers. In UK last year alone, they had 350 million plus open banking payments. So and it's a 50% increase year on year for them. So there is definitely adoption there. There is definitely power in the user taking, the consumer having access to their financial data and trusting those rails, those technology to be supported by the traditional payment rails, and doing a payment method.
Interesting. Yeah. So we can think about like as a pay by bank is the kind of like a new flavor or like new enablement layer of the older technology in some cases, right? Um, Maybe let's talk about this open banking solutions. So there are obviously some big players on the market like
Mm-hmm.
Plaid and others, and I think there are like new players are still coming on the market. How do they actually work from the consumer perspective and from the merchant perspective? That basically,
Mm-hmm.
as a consumer, I'm kind of like opening an access to my banking data. And yeah, if you can walk me through this a little bit. Mhm.
That's a great question, because there's a lot of nuance thing that's happening there, and think of a Plaid-like solution as a connectivity and consent management layer. Simply put, like if I had to oversimplify the solution. So what does it mean? Falling back to our example, you are in your favorite budgeting app and you're aggregating different financial institution. So when you're going and searching for, let's say, Bank of America, that's basically, that journey is being orchestrated by a Plaid like solution, where they are showing a list of financial institutions which are participating in the open banking network. And then once you go ahead and select, you have to authenticate, and as a user you have to authenticate. The authentication still is owned by the financial institution, so in this case, in this example, Bank of America, let's say. And then as you authenticate, once you authenticate, you have to authorize that, okay, what kind of access do I allow? Let's say I have a checking account, savings account, and investment account. I want to only allow data for checking account and savings account, and for this time period, and not for the. So as a consumer, you have the access to manage those consent, and those consent are managed by a Plaid like player in a token based environment. So they basically capture your consent, make it a token, and then on an ongoing basis, the third party is basically making call to this financial institution in a token based access. So they are orchestrating the connectivity to the institutions, and they are orchestrating the consent from the consumer side. Now, what there are a couple of other pieces to this puzzle. Like, one is a consent, very important piece from a consumer perspective, consent management. Second is outside in connectivity, like how is my financial institution accessible to this network, so to say. Then comes, within my financial institution, am I able to see my customer data? Like, believe it or not, in this day and age, many financial institutions, especially I'm talking about small and consumer banking and credit union space, they face a problem where they don't see customer data in one place. So the maybe the deposit data is in one place, the loans data is in the credit card data. So the challenge for them is actually to have access to data in that format. And then uh, let's say you are the third party who is aggregating multiple accounts. You now have so much more information. Do you have capability to analyze that, understand the intent, and take action, value first action for the on behalf of the customer. So those are just opportunities that are there. Like I wanted to take this opportunity to share the whole paradigm. So it's not about just the connectivity piece and consent management, but there is a lot happening in the back end that there's an opportunity there.
Right. So basically, for a bank and for a financial institution to participate in this program, right, and for their logo to appear in the open banking layer, right,
Mhm.
they need to do like a lot of work to enable and for them
Yeah.
to kind of like
Yeah. It
participate there.
is. And to
Mhm.
if I have to dissect that lot of work, that is basically they need to have uh, API layer which is connecting to the source systems, different source system on a real time
Mhm.
fashion, and allows them to present the data in a governed, auditable, and policy driven way. That is the core problem that these institutions have, because there is a compliance aspect to it and there is a policy driven, like what works for my financial institution. So that both of that has to be blended in while they are presenting the data into this network.
Right. I heard somewhere from one of the open banking like layer
Hmm.
providers that an adoption rate in the US is actually very high. It's like high 90 percentage. Uh,
Hmm.
that that's what they claim, like for the merchant, basically.
Hmm.
um, do you agree with this estimation? Is this how
Yeah,
you see the
it's
data?
not.
Mhm.
Yeah, it's it's such a nuanced topic because adoption rate is higher, but if you break the puzzle into two pieces, connectivity layer, where you're saying how many institutions are participating in this program, there is a lot of adoption. So Plaid alone claims 10,000 plus financial institution being part of it in US and Canada itself. So that's huge numbers. But if you flip on the other side, how many institutions are actually operationalizing this data and making use of it and using it as a relationship driver? That's very low. That's where the investment and lot of opportunities lie. And it'll take a different kind of mindset, and technology has to enable the financial institution in the right way, so to say, for them to tap on it. But there's a lot of opportunity there. Obviously, the bigger institution, the Bank of America, the Chases, the bigger financial institution, they are in cashing on this big time.
Right. What do you mean by using this technology as an opportunity driver? What's an opportunity here? Because as a financial institution, I enabled this tool, right, to start working. What are the other opportunities here?
Yeah, it's used because think of it like what is a like it's about it's an opportune movement to develop primacy, or become a primary financial institution for that particular customer. A, because what's happening is you are suddenly moving from an institution where money sits, you are now seeing where money moves. Where is it moving and how is it moving? If you can have make decision and understand how the money is moving, so let's say what are the direct deposit, what are the bill payments, what are my loan payments, where so now you have suddenly deeper understanding about me as a customers, and then you can identify what are the different opportunity that lies outside of my financial institution and where is the customer facing friction, and then decide that what is the best strategy. Do you want to retain that relationship, or you deepen the share of wallet, or you go ahead and acquire that whole relationship as a whole? So these are all intelligence for you as an institution to tap into this information. What you have to have is a technology layer that enables, we in ShiftMate call it a growth brain. What it does is it enables you to tap into different sources of information on a real-time basis, get customer sense or intent, and then turn them into value first action, like what is the best action for that customer. Do it in a governed, policy driven way and auditable. These are key problems because this is a highly regulated industry. So these are things that has to be done, and then go ahead and analyze that which strategy is working for you and what is not. So that's kind of the whole paradigm when I say there is an opportunity for the financial institution, or at that matter, fintech as well.
Yeah. No, that's very good insight. Let me maybe Yeah, let's talk a little bit about the data and who owns the data.
Hmm.
A couple months ago, I read about the like big news that JP Morgan Chase they start like charging for an access, and it was a big news for me because I'm not very into that topic and this product,
Hmm.
and I thought that it's all free for some reason. But looks like there is the whole marketplace there that even though, for example, I'm a customer of a big bank, right? That and
Hmm.
I'm allowing to like a open banking layer to get an
Hmm.
access to my information, or maybe from the like a budgeting app, right, to get an access to this
Hmm.
information. Obviously, the open banking layer they charge some fees, but also it sounds like there is a marketplace that my bank will be charging some fees to allow
Yeah.
these tools to get an access to my information. So even though I'm as a customer, I'm the owner, but it feels like my information being sold or like access to this information being sold when I'm allowing an access. Is this how it works? Or is it like the whole dynamics like in the marketplace
I-
here?
It's a, I want to say, for the most part, but I want to call out it's not, it's a paradigm shift, potential paradigm shift. It's not about the a race to sell customer data. At times, I've seen that piece. I've seen articles which represented that. It's about the. It's a fundamental question about. All right, we are participating in open banking, and CFPB, which is the regulator, said that in 2024, back in 2024, that the consumer owns the data and should have free access to the data. That's great, and that's how kind of the European regulations have been moving as well, and how this has been shaped. But the problem there is who pays for the infrastructure. Now, as a financial institution, I have to have all this API layer. I have to like who pays for the infrastructure? Who pays for the authentication and authorization aspect? Who pays for the liability if something goes wrong? So, a lot of the conversation that you're seeing. In 2025, obviously there is a political aspect to it as well, but
Mm-hmm.
safely we kind of have opened up those questions, and that's where the big discussion between JP Morgan and Plaid on like who is paying. The bigger banks obviously they have the resources to support a infrastructure like that, but they don't want to be their resources to be used as a commodity by some other third party. So that's where their angle comes in. The consumer banking place, which still holds a significant amount of these relationships, they are saying that okay, it will take us a lot to invest in this infrastructure and to be part of this. And quite frankly, FDX, which is the standardizing organization, the FDX is the open banking standard implementer in US. They are they recommend that the success of an open banking environment happens in all participant when all participants are participating across the paradigm of financial institution. So it boils down to like the debate is about how is the money moving or information moving, who controls the right to the information, and what kind of liability are they subjected to. That's the debate that you're seeing which is
Mm-hmm.
unfolding here.
Yeah, thank you. That's a great insight. So it's not like a new revenue source for banks. It's more like who owns and like who pays for the maintenance.
it it and that's where a small switch is happening. Like it was in the, if you see this as a compliance driven, like depending on where you are on the paradigm, if you're seeing it from the compliance driven way, you would see that okay, this is an investment and cost. And but if you're seeing it from a relationship driver way, where I'm fighting and I'm trying to get the relationship, at least I'll get idea about their transaction behavior, and that gives me insight about their unmet needs, then you are using this as a growth approach. So there is a monetization opportunity there for the financial institution. I mean, either way, policies can swing, but your strategies has to be, they have to outlast this policy swing. So irrespective, you participating in this program has some benefits for you.
It makes a lot of sense. Let's maybe talk about the data when it leaves the bank. So
Mhm.
I think the example that you provided, it's very good and very clean, like a budgeting app. So I would expect that my budgeting app has access to my transactions and my data for analysis. But sometimes I can use like open banking or pay by bank to pay for utilities, or maybe even like to pay for something else, right? It becomes like more popular, like as an alternative to credit card payment option. And I don't want these merchants to have access to my transactions because
Mhm.
why, right? But when I'm choosing the like pay by bank option, I believe that's one of the access that they are requesting to get like an access to some of my banking information, or I don't know, or maybe it's not like very clear for me. So do you see that some merchants can get an access to my banking data um, without kind of like a clear understanding from from the customer, kind of like get an access and to maintain this data? Is it possible today? Is it something that's happening?
I think it's 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 driven by multiple layer here. Like it's not like the utility example is a great example. It's not like if I use a utility website to and use pay by bank and they will directly start having access to my account information, because this is where the regulation really comes in, and is a really important part, that what kind of access are you granting, for what length are you granting, and can you revoke that access. These are all authorization and consent management aspect that a consumer controls. So it is on the merchant, when they are orchestrating this kind of payment, to them to control what kind of questions and screen and consent management you have. And you see obviously the bigger banks has a more nuanced approach to it, ability to maintain it, and more nuanced. The smaller institutions are playing a little bit of catch up there, but there is that aspect of regulation that is driving that, what kind of access you have, for what period you have, and can the access be revoked after it. So in this example, well set up payment methodology will be, it is a one and done kind of access. So sure, you'll have access about the source of the financial institution, the account number, as a merchant, for you to identify that, okay, is this coming from the right sources, and if I run into any ACH issue, do I have a ability to go back and settle down all those things. All that good stuff is there, but it doesn't guarantee that you would start seeing all my checking transaction on an ongoing basis for next 6 months, that
Right.
kind of aspect.
You mentioned that's on merchant to specify the right access level. Are there any like regulatories or like, I don't know, monitoring restrictions? Because what if I don't know, like there is a new merchant, I don't know, like a ride sharing app. I'm trying to pay by bank, and now they have access to all my banking information. That sounds very scary.
No, that's I want to basically it's not on the merchant to apply those. It's These are very highly regulated. It's
Hmm.
That's where, when you take a Plaid like solution, depending on what nature of the payment that you're doing, they actually it's not only API based, they at times support UI that you can blend in into your platform, which controls this, which have these controls really built in into it, and the best practices. So when you start using one of these players for your payments, let's say, that's where these controls are already baked in, and these are the payment processors, and these rails which are supporting this, they are highly regulated and audited in this aspect of things.
Yeah, that's interesting. Do you see, I don't know, were there any like history of like abusing this information? For example, I talked to one of the merchants in subscription, and they had an
Mhm.
idea like, oh, if we have an access, we can see that, I know, the merchant got like a bonus, right? And we are the subscription service, so we can just upgrade them, right? Now you have
Mhm.
quality in 4K, and
Uh,
like we can upsell you based on the financial information we're having, and that's a great
Mm.
marketing tool, right? That they can
Yeah.
use. But I'm not sure if like merchants agrees to this and they understand what's happening under the hood.
Yeah. Yeah, I can see some of that happening. Obviously, this is a evolving space and
Hmm.
newer technology, and it boils down to, okay, I have already, as a consumer, I have 50 things to check. This is on top of
Hmm.
it, and maybe I clicked the wrong box and gave the wrong consent, and that happening. But there is ever increasing auditability in it, and the UI standards or the UX standards are also evolving and being enforced, that okay, this amount of clarity needs to be there when you're getting this kind of consent. So I've seen that evolution in the last 5 6 years, actually, so to say, how the front end UI aspect and the customer journey, customer experience perspective also evolving, that hey, from a best practices, these are the consent and this is how you have to mention these things. And some of also it's a true two-pronged approach, that and also the financial institutions have started enforcing more control. So if you try and integrate the your like aggregate your account into some of this bigger financial institution, they are having more controls and more nuance, that okay, can you do you want this particular access for this reason. So they are also building in additional controls as part of that authorization process that you're doing. So when you're authenticating into your banking portal as part of the open banking connection, that's where the financial institution are also controlling that part of the experience.
Yeah, that would be very logical for them to own it because I'm kind of like their customer, right? So they should be motivated to protect this information.
Yeah,
Um,
exactly. And that's where the debate is changing. You see the debate that we are talking about. Like we are going in and building in all this. Who is paying for this? Or are we being used as commodity basically by somebody else in this case?
mhm. Yeah, definitely. I see the struggle now. Um, can we talk a little bit about the payments part? So you mentioned that the open banking is the like authentication and the consent layer on top of pay by bank. How the open banking is connected to, let's say, all the ACH. So, for example, if I'm the merchant and I want to accept payment, I'm using open banking to receive like the like credential information, right? Like I know, like routing number, account number, and also I can receive maybe some information, like basic information, like name or are there any like debt on the account, right? So I can make the payment. Um, I think that part is quite straightforward, but also there are some products that are kind of like providing instant payments using
Mm-hmm.
open banking. So I
Yeah.
think they're kind of like advancing based on the data that they receive. Can you tell me more a little bit about this part, like
Yeah.
how they use open banking layer for more like faster payments?
Yeah, that's where the Fed now and the real-time payment channels comes into picture. So that's where, and quite honestly, there is an uptick into the real-time payments aspect of it for multitude of reason. One, it guarantees, gives all the different participant, right from the merchant banks to the merchant to the acquirer bank to the processor bank and the network and the customer, everybody gets some kind of guarantee. But it also comes with a more instantaneous nature of payment, so the settlement is done right then and there. So a lot, what that does is it puts in a lot of burden on making sure that there is a lot of good investment that has gone into authorizing, like fraud detection, uh, authorizing the, is this the right person who is initiating the payment, and everything around that upfront basically, which in a normal ACH payment you had the bigger window to be done later on. So that has to be done upfront. But there is certainly an uptick in how the institutions are moving into real-time payments using open banking, pay by bank.
Mhm. Right. So again, it's like a combination of factor. It's not that not that super straightforward.
Yeah, and like just from pure numbers perspective, in US, I shared the UK number. In US, there are roughly around 114 million customers right now. That's up 50% from 76 million last year. So you're definitely seeing there is more adoption there, and there is basically last year, if I'm not mistaken, there are roughly 8.4 or upward of 8.4 or 5 million transactions using open banking just in US. So this number is definitely increasing as we speak, and there's more and more, even as a consumer and merchant aspect, like real-time payments are becoming more norm than good to have.
Yeah, I think that makes sense. Let's maybe shift gears a little bit.
Mhm.
So again, on the financial institution side, so we talked about that's they need to build like the layer and the API. What motivates them to do the work if they're like a smaller credit union, right, or smaller bank? So obviously, like to participate in it and to provide like better service for the customer. But is this the main driver for them to enable open banking on their side?
That's a great question, and quite honestly, I want to say there is not a lot of motivation. Actually, it depends on the lens of how the financial institution is seeing, especially in the smaller credit union and community banking space. If you're seeing it from the compliance perspective, like last year, CFPB had that any institution above 850 million has to participate in open banking. So that was seeing more from a compliance-driven approach that you have to go be compliant. But that's where it is seen as a cost center rather than an opportunity center. But if you switch the gear and see it as a opportunity to have the relationship and actually understand, and you combine it with a couple of other moves where you're making the switching costs easier, so switching the direct deposit payments, or switching your bill payments easily, where you can make a direct deposit easily, where you are making a loan payment easily. Now you are getting a full picture of the consumer behavior. If you are an institution, forward thinking institution, and you're thinking of an okay, how do I develop my primacy with my customer base? That's where understanding the payment behavior and the pattern becomes really important, and this allows you to participate on that. So for that, for you to really encash, you have to, like I said, start thinking of it in both side of the puzzle, not only from the connectivity perspective, but once you have the connectivity, how can you take action on it? But if you're making a holistic investment there, and tying it with a couple of other supporting strategy of making things easier, seamless for the customer, now you have a now you are suddenly sitting with the trust of the customer, and also a ton of data about their unmet need, and then you can decide how you deepen the share of wallet at that point of time.
If you'll give like one single advice to if you'll give one single advice to like financial institution operators, how to avoid kind of like mistakes and avoid problems with implementation, what it will be.
I would say focus on the basics really strong. It's not about open banking. It's not about like it, like the fancy UI and UX that is supported or participating. It's about fundamentally, do you understand your customers' data in one place? Do you have a good understanding, and do you have technology that supports real-time access to all this information? And can you understand that? And then when you connect to or participate in an open banking program, can you do it in a governed, auditable, and policy-driven way? And then do you have the opportunity to encash on the insights or the intents that you are getting, and turn them into actions that are feeling share of wallet, increase in share of wallet? So see it as a fundamentals. It doesn't change, like don't be driven by the fanciness of the terms, but the fundamentals are really important, and that will help you be really be differentiated in the long term. And that's kind of the core area where ShiftMate is operating and helping institution. drive growth.
That's very interesting. In one of the previous episodes, I had a conversation about agentic commerce, and I asked a similar question about agentic commerce, and the guest said that kind of like focus on the foundational data and on like how you structure your catalog, right, and how you structure like the shipping, instead of like all this noise about like agentic commerce and bots purchasing something on the website. So it feels like there is a pattern here that to be successful, you need to focus on the foundational like data structure and on a large of like boring work that that needs to be done first before
Yeah,
you go after kind of like some shiny objects. Yeah.
that's so true, because you flip the script. We are here having a conversation about what does it take a financial institution to participate in open banking and be successful. But if you flip the script and see it from the lens of AI readiness, what are you doing? You're setting up a basic access, you're creating a customer data profile, you're having real time access, and you are connecting, making the data accessible in a FDX compliant way, and then you have ability to track different intents from different systems. And in this case, it can be open banking and the account that's been aggregated, and you can carry on and take action. If you convert that whole loop, this is your AI readiness loop, and this is your agentic growth loop as well. So the foundation here are like you're spot on the pattern matching. It's pretty much still remains about having the foundation right and doing it in a, especially because of the highly regulated nature of the industry, doing it in an auditable, governed, and a policy driven way. That's really important.
Do you want to add anything about the topic before we jump to the final questions?
Uh, if you're a financial institution and looking for these solutions, this ShiftMate is we are the growth brain for financial institution, which sits between your people and system. And what ShiftMate does is identifies customer intents on real time basis and converts them into value first action in a uh, compliant, in a auditable, governed, and policy driven way. And then it goes on to tell you which strategy is working for you and not.
So you obviously have a lot of experience in banking and payments. So what do you think is the kind of like the biggest problem just in the payments world that is blocking us to achieve like transparent, reliable, fast, secure, cheap payments and money movement?
I would, if it's okay, I would like to take this opportunity to answer it from community and consumer banking perspective, because that's where this problem is actually more acute. I'm sure uh, bigger banks have it figured to some extent, so I'm not intentionally touching that topic. But in consumer banking space, either it is bank or credit unions, I think the biggest inhibitor is the way you see payments. If you're seeing payments as a back office operation, you're still seeing it as a cost center. But if you're seeing still, you think of it payments as a behavior that allows you to deepen your relationship with your customer, then your strategies differs, starts evolving, and then you start thinking about it differently. So I think that's where step number one is, to see payments as the opportunity to deepen your relationship, is a big piece of it. And same, then that experience transcends to the consumer side of it as well.
Right, exactly. And I hear this a lot from the kind of like even from the merchant payments perspective, to think about payments, like to shift how you're thinking about it. And the final question, like if you met like the elevator person who is like selling something online, and they're like, "Oh, I heard you're working in like payments and banking," what would be the kind of like one quick advice you'll give them to um, for them to accept payments more efficiently?
I would say them invest in making it as seamless as having a good understanding of the customer base, and knowing the top three or four preferred methods, and working it back to make sure that at least those methods are being supported by your platform as a starter. Like, it's not about the, like, I have to incorporate everything. Like, just having a good boils down to standard strategy, knowing your customer base and what are their preference around payment processing and supporting them.
Yeah, great. Thank you so much. It's been absolute pleasure, and I hope to talk to us sometime soon.
Thank you, thank you so much for this, for the opportunity, and love the conversation and the depth we went into it. Thank you.